That's it. Thank you. Well, hello, everybody, and welcome to this session. My name is Marjan de Latine. I'm the head of payments at SETL. I'm here with my colleague, Joshua Daniel, who is our expert in payments and who is helping me actually with this presentation. He's going to take you through what we are doing in the space of the payments. I'm very personally thrilled having joined the Mojaloop community. We joined actually months back. Nevertheless, I have been following Mojaloop since few years. I used to work 4 years for Ripple, where DLT, let's say one of the pillars of the Mojaloop stack is based on Interledger protocol, which is a protocol of Ripple. So I think this initiative is really interesting, and I'm very happy that I'm part of it now, and I hope that our company SETL can bring a concrete value to this very interesting project. I think let's say the full potential are still ahead, especially with the changes that are happening as a result of COVID and also the technology. So without further ado, I will provide you with an overview of who is SETL. So we are a London-based firm providing enterprise-grade, fast, secure, and permission financial cloud and distributed ledger technology. I think one of the main differentiator of the SETL is that there are already 2 live platforms in the capital market, one for fund distribution, and secondly, a central securities depository that has been developed over blockchain, and they are connected to regulated infrastructure such as Target 2 and Target 2 securities. I'm sure you're familiar with that. These are European ECB clearing and settlement system for payments and securities. So that means that our core business is really around regulated financial markets. And we are helping actually organization to embrace DLT. Is not a one shop fit all, actually, I would say. As you know, blockchain, it's basically a lots of adaptation and let's say perseverance in this space, because we have to ensure that the real advantage of this technology is understood and it's used as a real means. Our actually oversight is very much coming from the central bank space. To our board members, one of them is Sir David Walker, that has been previously a director of the Bank of England. And in addition, we have Christian Noyer, who used to be a governor of Banque de France until 2015. Josh, if you don't mind to move to the next slide. I think from the really IP perspective, it's very important to mention some of the capacity and performance of SETL platform, especially when you're talking about payments in different, let's say, segment of the payments, such as low value payments, retails, high value payments. Performance is very important, and blockchain is of course, it remains a nascent technology, but I think from my knowledge in this market, the capacity and the performance of the SETL ledger is very, I would say, impressive. It is matching actually the big incumbents such as Visa, MasterCard, in terms of the transaction per second, in terms of the management of concurrent accounts, and also more importantly, especially in the payment space, adaptation to the regulatory context, the filtering, the KYC, KYP capabilities. So we really, our system is really used based on the existing actually management and processing of the payments. So we go through the whole processes, and we have actually adapted our solution in order to cope with this requirement. Without further ado, I think it's very important to share with you what are our current solutions and, let's say, priorities. My colleague Josh will take you through to 2 major trends and initiatives that we are heavily working. One of them is around tokenization. This will lead us to the central bank digital currency, because it's exactly the technology that we use in through projects that we deliver to G7 central banks. And in addition, another element that it is very important is digital identity. I think the need of the digital identity is becoming even more important with COVID, because we see that even moving around the globe now requires a more streamlined way of identifying yourself, of course, for health passport. But we see as well, this trend is moving up as well into the payments. And we think that the future of the payments would be clearly a digital identity who is embedded in the transaction. And we are happy to share with you the latest initiatives and our thinking. So I hope that this will be fruitful. And most importantly, I hope that whatever we are doing somehow can contribute to the further success of the Moja Loop. So Josh, the floor is yours. Please, if you want to present yourself or...
Super. Thank you, Majan. So Joshua Daniel, I've been here with SETL for just over 2 years. Been primarily focused on working with, as Majan said, the G7 central banks on CBDC. And when I started, it was a question of if it would happen. And over the last few years, it's become when. And prior to that was with British Telecoms. I was a principal research scientist in cybersecurity. And that's where I start working on blockchains. So without ado, back to our topic. Now, it's effectively, we wanted to start with this trend on tokenization. And I just want to set the scene of what that means. To contrast to an account-based system, what does it mean to have tokens? And with accounts, I think the highlights have been the double entry bookkeeping. And then when it is so, it's the asset is not necessarily a bearer instrument, and effectively it's commercial bank money. And in terms of technology used, it's very much the traditional database. In contrast, tokens very much start with the chain of digital signatures, and that opens up a lot of possibilities, such as smart contracts, as we've seen, the pseudonymity, the potential of that, which are being explored by central banks as for a digital version of cash equivalents. And at the same time, it also opens up the opportunity for not just representing national currencies, but also synthetic, or even synthetic hegemonic versions, as once Mark Carney said. But at the core of it, what tokenization enables is it helps you to not just make a transfer, but also settle with a single message directly to the ledger. So as opposed to having a chain of book entries being added and then tracking them and ensuring settlement, this enables settlement with a single message to the ledger. And it also means with technology, we get an always-on infrastructure. So some of the projects we do with global banks, when you have clients spread across around the globe, being able to be always on is quite valuable. And having that centralized ledger or single ledger to settle means you remove a lot of this, the post-trade or even settlement issues with assets. It doesn't have to be on a public blockchain. It can be on private blockchains as well. As with SETL, we are a fully private and permissioned a blockchain. And just to jump to the next slide, which is just to depict what our tokenization means. So generally, when we work with our clients, be it central banks, or in this case, it could be a large bank, as you can imagine, it's around these few principles. One is simplification of the infrastructure. Generally, a global bank would have built on technologies over a few decades, and there is an increasing appetite to simplify the infrastructure. The second is this opportunity to make it programmable. What that really means is a token you can embed into workflows and trigger payments based on events. That could be real world events, or it could be programmed, but it's a programmability is something quite vital. And that leads to quite many use cases, such as the PVP, which is the payment versus payment in cross-border scenarios, or even delivery versus payment, which could be in the markets, the capital markets, or even for trading of goods as well. So the programmability is an important thing. And finally, as I mentioned before, it's that 24/7, 365 instant and direct transfers. And very much money now lives in wallets, and tokens natively sit in a mobile wallet. And especially with technology getting cheaper and cheaper, where with mobile phones getting more secure, it's very much becoming more accessible and a preferred way to send or receive money as well. Right. Nevertheless, with having a single ledger, you still need to manage the identity and the KYC, the AML, and with such a central or common view of transactions, there is richer data. That means it's much easier. A cleaner data means you have a more efficient AI or fraud detection systems. And that's another benefit to such a model. And with tokenization, it also means the current model of localized banks doing identity, that still holds true. That means you're still onboarded in a tokenized world with an app, or it could be a local bank, but you always have a view of your balance irrespective of where you are. Now, just to make the conversation a bit more interesting, I've added a poll, which is around central banks. And prior to that, the context is, in this case, as you can see in tokenization, this could have been a bank. But as you can see, at the end of the day, if, for example, a large bank issues their own tokens, that would still be like a commercial bank money. So ultimately, you still have to settle at your local RTGS, real-time global settlement system. And that means having many such tokenized environments still doesn't ultimately solve it. What we really need is the golden token, so to speak, which is a central bank issued currency, or CBDCs. Now, over to the poll. Now, I've posed a question. If everyone could jump onto the Modulo portal, I've entered these options. I'll read out the question, which is, what do you think is the percentage of daily UK RTGS settlement in retail payments is by value? What I mean is, if you look at the UK, in this case specifically, the UK's RTGS settlement system, what percentage of it is retail payments? And retail is basically me sending Marjan some money, or me purchasing something with my Master or Visa card at a shop. All of these, how much does that, what percentage of it is retail activity in the RTGS system? Is it 51%? Or is it 40%, 25%, 12%, or 1%? I'll give it a minute for everyone to do the poll. Please give us a shout if you're not sure where to do it. Catherine tells me it should be directly on your portal. Okay, the results are coming in. Okay, it's still changing around. I'll give everyone a few minutes, well, a few seconds rather. Let's say 30 seconds before we take the results. Okay, all right. Let's jump to the poll answers, and let's look at what people voted for. So 6% said 51% of the RTGS settlement is retail. 44%. There are more votes coming in, but the biggest chunk have said 40% of the UK RTGS relates to retail payments. And the least votes for the 51%, preceded by the 1%, which is 12. Okay, now, before I reveal the answers, I would like to let you have a clue and sort of work yourself the answer out, which is I've copied in the latest RTGS numbers. And as you can see, there is daily, it settles 741 billion pounds worth of transactions. And for your benefit, I have highlighted the retail, which is FPS, the fast payment systems, the BACS, Link, the Visa Europe, checks. And if you add all that up, which I've done, it comes to about 1%. It's only 1%. So the last option was the correct answer. And which is comparable to a penny to a pound. So for every pound that is settled every day, a penny correlates to the retail payments. It's not surprising because the chaps relates to a few payments daily between a few banks, but that's essentially settlement of the wholesale payments, which relates to the interbank settlement in terms of other activities other than retail. So this is just to put into perspective how an RTGS also needs to cater not just for retail, but also the wholesale payments at the same time. What we've been working on for the last few years is working with G7 central banks, and we always had a long bet that a CBDC would come true. And the reason for wholesale, our most recent experiment was with Banque de France, and the results have been published, where we basically did a live experiment of purchasing and settling fund units on a blockchain. And we demonstrated how it led to an instant settlement, and which meant zero hashtag risk. And that is very good, essentially, from a regulatory point of view and from a client point of view. And then the question we also looked at was, what is CBDC? How is that different from a commercial bank money? In a sense, is that a CBDC, a token, is a direct claim on the balance sheet of the central bank. That means even if there is a bank to help you custody your keys, your tokens, end of the day, if they went bankrupt, you will always have the right to that value, which is on the balance sheet of the central bank, and which is very different to a commercial bank money. So in wholesale, it made sense, but in retail, this slide I want to highlight was the complexity of retail payments. And if you look at the section at the top, it sort of highlights the number of players that are involved when I use a Visa or a MasterCard or any such card payment systems. And there's a card processor, an acquirer, a clearer, an issuer. It's an extremely orchestrated, complex process. While from a CBDC point of view, you can grossly simplify it. Obviously, it's an oversimplified image there. But the idea here is that it's a single instruction. If you remember what I said, it's a single instruction to a ledger which does the settlement and the payment. And that means the number of actors are much less, and also provides opportunities for banks and MSBs of fintechs to play a greater role in society in enabling payments. And especially with devices being much cheaper, Android or iOS, any others, it's more pervasive. So it's cheaper to manage secure keys with your phones or interactions with your banks today. So it's effectively for enabling real-time settlement, the speed, the efficiency, reduction in complexity, and also programmability that comes with a blockchain-based a CBDC system. So it very much opens a new way of doing things, opportunities when our world has more IoT, more AI systems. It effectively is more programmable and caters to those needs. And finally, from a solution perspective, we've been very much tied to the BIS requirements, which operates, which sort of connects all the central banks in terms of these systems and designs, and especially on the cross-border use cases, which we looked at, where if there was such a CBDC, digitalized cash systems in multiple countries, how would a cross-border scenario look like? And the system has been is NIST and NISA, which is the cybersecurity requirement, compliance requirements in Europe and US. We're also interoperable with other RTGS systems or SWIFT and ISO messaging systems, and even other DLT solutions as well. So that's effectively the CBDC part of things. But as I said before, money is only one part. Which is to have an account, you still need identity. And if you look at what is a transfer, it's a combination of your digital identity combined with a book entry. So we looked at the book entry part, and my take on this slide is to say that just like how we're looking at paper money is needed to change into a digital world, the identity also needs to do the same. And we today, to open accounts, we still take photographs of our passports or identity cards with the phone cameras. It's very much paper-based today, and we're trying to retrofit an old world to an identity system for today. So this will have to change because there's a lot of fraud, and especially with CBDC and other such systems, security will be of vital importance. And the way we are looking at it is combining that with a new technology called verifiable credentials. It's a digital way to share, present, or prove a fact or a qualification without needing to reveal all your personal details. It is an open source implementation we've done. We call the verified. And it's based on the W3C standard. So it's about being able to do the KYC, the onboarding, age verification, and being able to do that without compromising a person's personally identifiable information. And to link that to tokenization, there are different points at which they interject. And effectively, from a compliance perspective for payments, you need to have a KYC of your payer, the payee, and then there is a source of funds check. And these get very complicated, especially when it comes to a cross-border use case, which are, FATF has these extremely rigid guidelines. And our approach has been to combine tokenization with verifiable credential system to do as much pre-validation, reuse, and also simplification. And with verifiable credentials, you get a portable identity. That means you're also able to embed this identity into your payment messages. So it could be within your transaction messages, or it could be ISO 20022 message. And that's a new area we are currently exploring. And we would love to bring these technologies and these learnings to Modular community. Over to you, Marjan. You're on mute, Marjan. Meanwhile, any questions?
Exactly. Josh, I thank you for that. I see 2 questions on the chat. Do you want me to read it or?
Yes, please, Marjan. Yeah,
yes.
certainly.
So from David Mangini. So thank you, Marjan and Joshua. How much of the project work you did with Banque de France on wholesale CBDC can be carried over to a possible retail CBDC?
Okay. So Marjan, if I take that question, so in terms of the design, what we looked at was a synthetic CBDC. And that's effectively very much transferable. So in effect, in a synthetic CBDC, it is still the commercial banks who have an account at the central bank, but then they manage and issue usage rights of the synthetic tokens onto a shared platform. So it's very much transferable. And one of our hopes is to have a follow-up projects to demonstrate that interoperability between the retail and wholesale. So it's very much the same, and it's the BIS approved or suggested model as well. And we've also looked at initially with another G7 central bank on the retail side, and this was prior to BIS, and we still came to the same conclusion, which is the same model we're using today.
Thank you, Josh. Another question coming from Ross Graham. Was it difficult to prove provenance of the tokens? What about fraud and AML?
Indeed. So provenance was critical. And as we know in the financial industry, identity is everything. You'd never allow even pseudonymity or even anonymity. And so on CBDC, we asked the central bank, would they need something like that? And our solution around that is the wallet. So effectively, at the time of onboarding a client or an individual procuring CBDC, they would be KYC'd. So it could be your existing bank who provides you a CBDC or a token wallet, or it could be an independent MSP, but they still do a KYC. But that's only if you are purchasing CBDC in exchange for your deposits. But post that, if I'm already holding some CBDC, the rules slightly change depending on the countries. So for example, just like cash, you're able to transfer certain amounts. They're looking at caps, which we're able to enforce with the ledger. So that was the other benefit, is you're able to enforce caps as to how much money you're able to transfer between addresses which are not KYC. So you're able to capture KYC and non-KYC and differentiate them at the core of the system. At the same time, because the system itself is just a list of balances and address, it's rich data. So central banks are getting real-time data on distribution, and that really helps with the policy making and to measure the impacts. So even trying AML and other systems, real-time data, clean data is very valuable. So it's that combination which we're looking or hoping to solve that.
I think is 1 minute left, so I'm just having for one. Let's time for another question. Can you say something about volumes? Retail is obviously high volume, low value. Can you handle a Saturday afternoon the week before Christmas?
Absolutely. So in terms of our transaction throughput, our technology itself on a single instance, as Marjan said, we can do 30,000 transactions a second. That's average. So we can do peaks of a few hundreds of thousands. And the way we designed a system is you can have multiple in parallel that interoperate, and that means it sort of makes it infinitely scalable. And something to highlight in a blockchain as well is we've tested to hundreds of millions of accounts concurrently, which is quite important in retail. So it's this exact same core we use, be it retail or wholesale. It's the same technology.
Okay, thank you very much indeed for your time, and I hope that we managed to bring you some interesting information. you have our details. Please feel free to reach out to Josh and myself, and I hope to see you again in Umoja Loop community events. Goodbye. Thank you.
Thank you. Bye-bye.